Good morning, everyone. I'm Kevin Hincks. Welcome to another edition of Daily Trader with Kevin Hincks. We got a market that's moving today, a little geopolitics affecting the markets today as missiles delivered to Ukraine by the United States are being fired into Russia. Russia has escalated with the discussions of nuclear thresholds and lowering them and back and forth with the United States. And I don't believe that we're on the verge of any major world war. However, the market is down today because geopolitical risks have risen. And they need to, as long as they remain high, the market will feel uncertain. And that's what that is. There's uncertainty. You can tell by the VIX. That's now back up to 17. There's overall uncertainty about this, how it will play out, and the markets don't like uncertainty. There's the geopolitical aspect to today's trade. Now, from the earnings side, Walmart had earnings overnight. The stock is currently up 3%, trading 86.73. And it's interesting. They beat on earnings 58 cents versus 53. They beat on revenue 169.6 billion versus 167.5 expected. So they beat on earnings, beat on revenue, but global e-commerce up 27%. And also, here's the most interesting, because this is going to tie into what we're going to trade later in the show. Sales outside of grocery. Remember, they're one of the world's largest grocery chains, but sales outside of grocery. There's the most interesting part of the Walmart earnings. That means that, the fact that discretionary was struggling all this while, and now it's coming back is real interesting. And it's real interesting to one of the names we're going to trade today. First, we're going to trade Supermicro, of course, with the news out about Supermicro. Then we're going to trade Target, that has earnings coming out tomorrow morning. So we'll look at those two. So let's get to our first trade of the day, and that is Supermicro. Supermicro, a lot of the uncertainty around Supermicro was they weren't saying anything. There was no news. The news that was out there about their accountants leaving was just out there without any real response. Well, they did respond finally. They hired BDO USA, a top 5 accounting firm in the world, as an independent auditor. They have plans to get back compliant with the NASDAQ. They're going to complete their Form 10K for the year. They're going to complete their Form 10Q for the quarter, and they hope to become current with all their paperwork. BDO is now their independent auditor. Now, that's really good, and you see the stock moved up yesterday and is up again today about 25%. Now, that doesn't remove all of the uncertainty, but it removes a big chunk of it because now they have a reputable accountant. And remember, this stock had sold off so far, and it looks like it was on its way to be delisted. It looks like they've turned that around now. So this name, Supermicro, is now back on the trading map and really moving around a lot. So the trade we want to do, remember, they have earnings tomorrow after the bell, the same as NVIDIA, which, needless to say, we'll cover on tomorrow's Daily Trader. So the trade we looked at in Supermicro is just by the way, both the trades we're going to look at today, similar makeup. Diagonals, buying next week, selling this week, right? We've got Supermicro, the implied volatility in this week's options, 209%. Next week's, 185, still elevated next week's, but still, this is one where you are playing the divergence. It doesn't have as big of a move as it's saying. Why? Because that second week is so big that I think it's skewing the expected move. It's still about a 10% move in the stock, just under a 10% move, but it's certainly one that I would think it would be bigger. It seems light. So the paper money practice trade that I looked at for Supermicro is the diagonal spread, which when you look at it, we're going to buy, like I said, Nov 29th, the 25 call. we're going to sell this week's Nov 22nd 30 call. This is a paper money trade that we're doing in ahead of their earnings event tomorrow afternoon. We put it in around 265. It's trading a little higher than that now. It's trading a little over $3. Now, here's what you can always do. Adjust your strikes, right? If this trade that you were looking at, the stock has moved away from that trade. Remember, it's already up a half a dollar from where we looked at it. Move your strikes up, right? Maybe you adjust those strikes to the 27.32 or even the 30.35, whatever you want to do. Remember, the strategy is what we're looking at. We're spending about, $2.65 for a $5 diagonal, but it's moved away. Maybe you drift up your strikes. These are dynamic markets. Supermicro is moving all over the board. So you've got to use limit orders to make sure that you're using price discovery. And when looking at these, play with paper money first. Test them out, see how they're doing, and then possibly go to real money on these trades. And always use the risk profile to understand your risk on these trades. Supermicro is moving all over the board. You want to put on risk-defined strategies that allow for big moves and control the risk on big moves. Because let's face it, Supermicro could go to $15, it could go to $45. You've got to be prepared for that, okay? All right, that's our first trade of the day. Let's get to our second one, and it's Target. Now, Target's interesting because Walmart is interesting. Target has earnings coming out tomorrow before the bell, and the Walmart news about discretionary spending. Remember, a lot of reasons why Target stock is off its highs and trading, significantly off its all-time highs was because of discretionary products that their inventory was a miss right after COVID and during COVID. And that took their margins way down and it affected their stock, and they had to get rid of that inventory, and it put them in kind of having their defense on the field. So now, two things can happen. Either Walmart is completely eating Target's lunch and Target is in trouble, or Target is trying to find their niche in between the Amazons of e-commerce and the Walmarts of big box. If they can find that niche in between, Target is a fraction of the size of Walmart and Amazon. It's got a higher dividend yield if they pay it. It's got a much lower PE ratio. So Target, when we're looking at that for a trade, very similar to what we had before. And that is, we're going to buy the November 29th 155 call and sell this week's 167.5. Why? Look at the expected move, $13. So we were going to buy an at-the-money call, sell one representing right in line with the expected move. Remember, this is paper money. This is a practice trade. This is an example trade for you to look at. But buying an at-the-money in next week, November 29th expiration, and selling this week's November 22nd 167.5 call. Same expirations as last week. The front expiration in Target is 120 implied volatility. November 29th, a 73. So big dispersion between the two expirations there in Target. This one, we put it in for about a $4.30 debit. I think it's trading a little bit less than that now. When we look at it, it's trading about $4.80. Again, if you want to switch, if this is getting away from you and maybe you spend too much on it, adjust your strikes. Right? If you think that the $13 move, but the stock has moved up slightly, adjust your strikes on these trades and make sure you've got them in line with, number one, the expected move, and number two, where the most efficient place to get into these trades is. So 2 diagonal trades today in Supermicro and in Target. That's our show for today, Daily Trader. Enjoy it. These markets are moving. There's geopolitical risk out there, and there's earnings season. Little slow on economic data this week until Friday, but lots of movement and a look at the U.S. consumer as we get to the second half of earnings season. That's all for today's Daily Trader. I'm Kevin Hincks. Have a great day, everybody.